Hi everyone, let's go through my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame impulsive scenario where we still expect a wave 5 towards the upside as price is now ranging in a wave 4. However, this wave 4 is starting to take a long time. You see a couple of fib times that I have on the chart over here. These are taken from the high of 1 to the low of wave 2 to the high of wave 3, basically comparing wave 2 with wave 4 in time, as waves do not only have a price relationship but also a time relationship, and I prefer the low of a wave 4 to be made before the 3 fib time. Now, the one low that we have at the moment is the low over here, and it's not a bad low, right? This low, we had some support there as well. We had a target box where price moved to the downside, hit the target box once, moved up, then came down once more, wicking this first low, hitting the target box again, and then moved to the upside. We now also have some bullish divergences over here. So that is quite a nice scenario for potentially more upside because time is running out. Or the second option is that price relatively soon has to move to the downside, maybe go towards this key level over here, wicking the low of the lower degree wave 4, hitting the 382, and then move towards the upside because time is running out. And if this range is going to continue for a longer time, then it's starts to become less likely that we are in a wave 4 and we have to look for other options. Now, as it stands, we are then still looking for a wave 4 with a wave 5 to the upside, where an interesting area of resistance is between 32.3k and 32.7k, as these are the 2022 range highs. For maybe then a liquidity grab, taking the highs of the 2022 range and then moving towards the downside. Now, of course, it can be quite a wick as there is a volume above here, so one can maybe expect quite a high wick. But what you want to see in this potential trading setup, because of course you have your own plan and we're on YouTube, I'm no financial advisor, is that in this particular scenario you could have a swing failure pattern trade, meaning price moves to the upside with the candle, wicking above those lines, but closing the candle below, like a 15-minute, 5-minute, 30-minute candle closing below these lines over here, which is then the entry, stop loss above the wick, and then you'd be looking for downside. That is a potential scenario there, but what you have to take into account is the volume of price moving towards the upside, because if price is going to push towards the upside on high volume, you have to watch out for continuation. And I'm actually talking about volume, comparing wave 5 with wave 3. So over here in this blue wave 3, you can see we had a couple of high volume candles. And in a wave 5, you do not want to see a wave 5 having higher volume than you had in wave 3. So if we get high volume candles over here while price is moving to the upside, this scenario over here is not a really good idea. So pay attention. And besides the fact I'm no financial advisor, as mentioned. Micro bearish scenario is a scenario where we still expect another low. Now, as this range is continuing longer and longer, this becomes more of an alternative scenario, with the bullish scenario over here becoming more of a preferred scenario because the probabilities are changing because of the time it takes for this wave 4 to form, right? Because in the end, we are playing a probabilities game. Now, in this scenario, we then have a 3-wave W, 3-wave X, looking for a 3-wave Y towards the downside. Currently, price over here found support on the daily naked point of control at 30.2k. We still have a bit of resistance right above at 30.7k. That is a very fresh daily. So you could still see something like this, where price moves to the upside, hits the daily, and then comes down. But then again, we don't want this to take too much time because we don't have that much time. But in this scenario, the most common target for wave Y is between the 1 and the 1.236, which includes this low over here at 29.5k. So that's quite interesting for maybe a liquidity grab and a move towards the upside. But then again, this scenario starts to feel as an alternative scenario because of time. We had some nice support. We are creating bullish divergences, as I will show you in a second. So we might prefer more upside at the moment in this then more bullish scenario. So in this scenario over here, we have a 3-wave structure in a WXY, which then is the end of wave 4. And from this target box, and I always love my target boxes, that's why I share them to you, they're always very relevant support and resistance levels. So over here, very nicely respected. You then move up, move down, creating bullish divergences. That's nice, right? It's a potential interesting scenario, also hitting the daily naked point of control for maybe now continuation. And this scenario is gaining probability because of the time it takes to range at the moment. So currently probabilities are switching, which is very, very, very interesting. Also, just before the news is hitting this afternoon, because we're going to talk about the news in a second. So in this scenario, you expect this to be the low of a wave Y, this to be then a wave 1, 2, for then eventually continuation to the upside in a bigger wave 3, because a wave 5 is a impulsive structure. Now, what has to be said is that the volume over here is not that characteristic for an impulsive structure, which then goes against the bullish scenario, funny enough. So over here you can see we have a very, very high volume peak right at the high. Now, as I mentioned earlier, usually a wave 3 has the highest amount of volume, which then in a 5-wave structure should be somewhere in the middle. But as you can see here in the middle, volume was dead. There was no volume over here. Volume started to gain traction once price moved into this territory, which then is potentially a wave 5 or an extended wave 5. But the highest amount of volume at the high is very is a big characteristic for a wave C or a wave Y, for a corrective structure and not an impulsive structure. And this move to the upside, as I already spoke about in my previous video, does not look like an impulse. And if we're looking for a wave 5 towards the upside, you want to see a wave 1 to be an impulse, right? You want to see a wave 1, 2, 3, 4, 5 for more upside, but this wave 1 by itself needs to be a nice 5-wave impulsive structure. And that's a problem. First of all, because of the volume, where in the high you have the highest amount of volume, which is actually not what you want to see. That's more characteristic for a wave C or wave Y, which is then a corrective structure. But also, as explained in the previous video shortly, if this is wave 3, if this is like a wave 1, 2, 3, 4 extended fifth, then this wave 3 is the shortest wave between 1, 3, and 5, which is not what you want to see. Wave 3 is not allowed to be the shortest impulsive wave, unless if you go to the 3-minute, 5-minute structures, this somehow is another structure, maybe wave 1, some very weird wave 2, and then a 3, then yeah, wave 3 is longer, but that's not really something I go into, like the 3-minute counting. It changes so quickly. But basically what I'm saying is, if we look in more detail to this bounce to the upside, it currently does not look like an impulsive structure, which therefore still again brings probabilities to potentially also this bearish scenario. So yeah, the probabilities are changing because we are ranging for a long time, right? And that's not what you want to see in a wave 4, which might go against the bearish scenario and is more in favor of a bullish scenario. But we still have time for price to dip to the downside, take this low, create a new low, and then move to the upside. And that's something I think is very interesting also because of what's been happening with the CVD. So first of all, the price action to the upside does not really look like a nice impulsive structure, but also the bullish divergences we do have over here are countered constantly by bearish CVD divergences. So yes, we do have bullish CVD divergences. We have bigger ones over here. We have more local ones over here. The bigger target is here at like 31.4K, the more local target at 31K. That's all nice, all good. The main issue is that it's not a nice and clean bullish CVD divergence, because you also see bearish CVD divergences inside this bullish CVD divergence, because the bullish one is higher low in price, lower low on the CVD. But the cleanest setup is a move up, move down without any bearish CVD divergences, and then creating the bullish CVD divergences. And if I go to the AGGR chart, I can actually show you what happened. And I've been sharing this in the silver group like the whole morning. I've been updating YouTube silver membership members over here with the CVD divergences, the different levels to look for as well, and a lot more stuff that's been going on in the morning. And one of that was those local CVD divergences, where over here, lower high on price, but here a higher high, and again higher high on the yellow CVD. Now this already played out. Then after my morning video, price starts ranging, continues ranging, goes towards the downside, and then again lower highs on price, higher high on the CVD. Again bearish CVD divergences for then this final push towards the downside, and that is where we are right now. So at the moment, CVD, one could say, is relatively neutralized. We don't really have another like bearish CVD divergence. One can argue, by the way, we have again a lower high, and if we look at the yellow CVD of this high, moving my cursor to the downside, then you can see that on the right, this high over here goes above my cursor line, which means potentially again some bearish CVD divergences, which could potentially work in favor of the bearish scenario. So it's a bit of a mixed scenario, and also therefore you feel and like both of the bullish and the bearish scenario is basically around like a 50-50 at the moment. However, time is on the side of the more bullish scenario. We have bullish divergences because the bearish ones, yeah, they played out. The bullish ones did not yet play out. We did find support over here, but it is difficult to say at the moment what is really preferred. So in general, we are looking for a move towards the upside in a potential wave 5. If price goes up like that, that's fine. If price first moves down and then goes up, that's fine as well. But the preferred scenario is the low time frame impulsive scenario, where we're looking for a wave 5, unless of course we just continue ranging and nothing happens. In a more alternative scenario, this was the high and wave 5 is in, and this structure over here is part of a bigger corrective move towards the downside in potentially a wave 1, 2, and then a bigger 3. Or this is the end of a wave C and you expect more downside. But as long as price is not going to move to the downside rapidly, it doesn't really make sense to talk about that at the moment. Finally, the news, which hopefully gives us a little bit of direction. So the news at 3:30 p.m. Central East European time, we have high impact news over here. So hopefully that creates some volatility and therefore for us some direction. Make sure you do trade safe around those hours. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I will see you at the next one. Bye bye.